Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia Derivative and managed by our company, LifeChamp. So today, we are very excited to be doing this topic that is titled Mastering Equity Futures, Tactical Tools for Trading and Hedging. So welcome, everybody. My name is Shane Shu. I'm the moderator for this session. All right. So today, we are going to look into how do we use equity futures to achieve our trading objective, whether to help us to speculate or scalp in the market for speculative gain, or we can use equity futures to hedge our stock portfolio. All right. So in a market downturn, we'll be able to use and to learn how to use equity futures to hedge our stock portfolio. In a bear market, we can still profit from the equity futures. Okay, now the market is very volatile. The rising interest rate environment, coupled with the recessionary fear, has caused the market to be extremely volatile and also bearish. So it is very timely for us to look into how do we use equity futures to protect our portfolio and also use it for speculative gain. Before we begin, allow me to share the disclaimer. So whatever you share in this session is only for educational purpose. So in no way that will give you any recommendation for you to buy or sell any listed derivative that we mentioned here. So if you decide to make any investment or trading decisions, you're 100% responsible for all your investment risks. All right. So it gives me great pleasure to introduce our speaker today. And she is none other than Pauline.
Hello, good evening, everyone.
Yeah, so Miss Pauline is the CEO of Sigma Wealth Sdn Bhd. She's a certified financial planner and a licensed financial planner with SC and Bank Negara. Currently, she holds the chairperson position in the Financial Planning Association Malaysia, Johor chapter, and she's also their course facilitator for the FPAM CE courses. Now, Pauline is the author of 5 investment and financial planning books, including the MPH and popular bestseller, I Love Stocks and I Love Trading. Now, she has been a regular writer for various magazines and newspapers such as Nanyang Xiangpao, Money Compass, Citabella, Personal Money, and others. Now, currently, she is a regular commentator for City Plus FM radio station for the Daily Stock Market Outlook. She has 14 years of experience delivering capital market trainings to over 5,000 retail investors in over 50 public programs and in-house programs by financial institutions. And she has 10 years of experience trading BMD and foreign futures. Now, she is also the first female certified chartist in Malaysia and a member of the Society of Technical Analysis UK. And she received her MBA in France from University of Leicester, MBA in Finance from University of Leicester, UK, and her BBA in Finance from York University, Canada. So, Pauline, good to see you here today.
Hi, Shane. Hi, everyone. Yeah, good to be here. Okay, so
all right.
Shall I start?
Yeah, please.
Okay, so I'll take over from Shane and let me share my screen. Okay. Okay, so let me see that today's topic is called Mastering Equity Futures Tactical Tools for Trading and Hedging. So welcome, and my name is Pauline Yong. I'm a certified financial technician, and I'm also a licensed financial planner. So before we begin, so perhaps I need to ask, how many of you have actually started in the futures trading? Okay, all along I've been talking about equity trading, right? So today's topic is on futures market. Okay, so how many of you are already investing or trade futures in the futures? Okay, so if you have trade futures, you put a 1. If not, then you just say never or 0. Okay, so if you have been trading futures, you put a 1. Quite a number of you have been trading futures. Okay, and a number of you not yet. Okay, very good. More people know with no experience. Okay, sure. Okay, I will make it very, very simple. Initially, when I just started in the futures trading, it took me quite a while to understand. After I understand it, then I find it very, very useful in terms of trading. And now on a daily basis, I am trading futures. even more than I trade stocks. Okay, so it is so convenient and so easy and such that I have been trading futures more regularly than I trade the stocks. So today I would like to share with you what are the basic knowledge for futures trading and how do we trade. Okay, so I will talk about the history behind it, and also where do we find the sources, and as well as some of the trading strategies. Okay, although I will not go into like too many, there are so many trading strategies, but I will just touch on one or two trading strategies that are very easy to spot. Okay, so in trading, it's just about technical analysis. So you just need to spot those easy pattern, and once you can spot those easy pattern, then you just have to repeat over and over again, and then make sure you do your stop loss and manage your psychology, your mental emotion. Then you'll be able to sustain, okay, in order to profit in the futures market. Okay, so let me begin to kickstart your futures trading. So today's lesson is for the beginners. So hopefully it's a starting point for you, and then you will try to learn more and to maybe perhaps on a paper trade first. After some paper trade, you gain some confidence, then you go on the real trading. So what I will go through is the basic of this the derivative market, and also particularly look at index futures. Okay, so today's futures is about index futures, and the index futures will be our KLCI index and our FM70. And we will look at the fundamental factors behind them. Okay, so what drive this index to move their prices, and also to learn some simple trading strategies for these index futures, and also to gain some insights on the FTSE for Good index. So this will be the new index futures, which is going to be launched in December, and also to explore the various case studies. So these case studies will be incorporated in the middle there. Okay. So Bursa Malaysia, these are the background of the Bursa Malaysia derivative. So as you know, if you want to trade futures, we cannot use our equity trading account to trade the futures. Okay, so it has to be open in another account. It's called the derivative Bursa Malaysia derivative futures account. So it will be under separate account. Okay, so then you need to open an account, and then you put some money, then you can start to trade. Okay, so what is a futures contract? Now, when we buy a stock, we are like buying 100 shares, 200 shares, 1,000 shares. We are buying shares, okay? And the shares are according to the stock price, because each company, they will have a different stock price, and then you just multiply by the price times the number of shares. That is the amount of money that you need to pay for those equity trades. But however, for the futures, it will not be like that. It will be based on contracts. So it will be like you are buying one contract, two contracts of the futures contract. So then what is a futures contract? A futures contract is a standardized contract between two parties, the buyer and the seller, and at a predetermined price. And this price will be the future price. So it will be according to the calendar month. So for example, now is November. So you'll be, if you are trading the November month contract, it will be based on the November. And then you can also buy December and March and June. Okay, so you can buy the further months contract. So it will be based on the months, and the price will be a fixed price. So the contract price is fixed. So later we'll go into how much is that. So it will be a contract agreed upon two parties, buyers and sellers, and the price will be the futures price. And the delivery and the payment will occur at the delivery date. So for the futures will be at the index futures will be at the month end. So for example, the last Friday of the month, or the last date of the month. So for example, November. Okay, so if I look to November, the last date of November is actually 30th of November, and that will be on a Wednesday. So then on this the 30th of November, Wednesday, that will be the last date. So if you happen to hold a November contract, so this November contract will be expired on this date. So what happened if, let's say, you hold a November contract and then you didn't sell, okay, you forgot about it, let's say you didn't do anything, you just bought that, okay, so what will happen? So don't worry, if let's say you buy and then you forget to sell, your brokerage house will sell it for you automatically at 5:30 p.m. So at the end of the day, then they will just have to close a position for you at the settlement price. So you don't have to worry, okay? You don't have to worry that your money is gone. No, your money won't be gone. It will be just closed by your broker account, and then the money will be given back to you, okay? So there are two major types of the futures contracts that are very, very popular that you can trade either in Malaysia or in any part of the world, as long as you have a futures market. So in Malaysia, we are trading very popular is the index futures and the FCPO, the crude palm oil. Okay, so we have the commodity futures and the index futures. These two are the most popular futures contract in Malaysia. So if let's say you are looking at trading the futures market, you want to ask what's the contract that people are trading. So most likely you will hear that people are trading the FCPO. So the FCPO is actually more popular than the index futures, and that FCPO will be more volatile than the index futures, which to me, because my risk is more to the conservative, okay, I cannot take too much risk, so I don't trade the CPO. I don't trade the FCPO, but I will trade the index futures, and I will look at the index futures on a daily basis, and I will just observe if, let's say, today I look at the market in the morning and I see that it is like 50-50, meaning that there's a 50 chance that the market will go up, and then there's a 50 chance that the market will go down. In this kind of a situation, I will not trade. Okay, so you look at the sentiment and then the market in the beginning of the day before the market start at 8 o'clock or 7:30. When you look at the US index, you'll be able to know what will be for today. Basically, this morning, I already know that today is 50-50, but I look at the situation is more a bit to the bearish side. Okay, so that is the opinion to me was established even right before the market opened, because you look at the US market and then you look at you can feel the sentiment of the futures market, which is related to the stock market. Then you will be able to see that it is actually looking at not very bullish today. Okay, and in fact this week is not very bullish. Okay, closed auto, structure warrant. Okay, yeah, some of you trade warrants, but this futures contract is not like warrants, because it is based on like warrants, it is traded in the equity market. So futures will be strictly in the futures market. Yeah, you see, like most. Okay, so you said that yesterday the US was bullish, right? So naturally you would think that today the Malaysian Bursa index will be bullish, right? A lot of people would think that today is supposed to be bullish, but why is it that I look at it and then I said that it is bearish? Of course, there are certain reasons. Part of the reason is a political reasons. So not in a position to give my opinion, but then yeah, we are also looking at the political factors as well. Okay, so that is looking at the index, which means that we not only we have the external factors, we also have the internal factors. Okay, so but today we will just focus on the external factors. Okay. Okay, so here we are looking at the contract, a standardized contract. Standardized contract meaning that it will be specified. Okay, so the contract size, which means that for example, the FCPO, they have 25,000 metric tons for the crude palm oil. Okay, so that is the size of the contract. So for the KLCI will be the index. Okay, the contract is with the index. So the index is 1,400 1440, right? So that will be our size, 1440. And then the contract month will be the current month and the next month. So it will be November and December. And then plus quarterly month. So what are the quarterly month? The quarterly month will be March, June, September, and December. Okay, so we have the current month and the next month, and then plus the quarterly month. So the quarterly month is December, and so happen is also the next month. Okay. Then the trading hours, later I will show you here. So this is the code, it's called the FKLI. Okay, so we trade the index, KLCI index, and in the futures market it's called FKLI. And the crude palm oil is called FCPO. Okay. So here we are looking at 1 point. So for each index point, so let's say we buy the one contract at 1440. Okay, let's say this morning you look at the market and then you manage to buy at 1440. So you long a contract at 1440. Okay, and if let's say throughout the day the price, the index, okay, for the futures market, the futures market will actually link to the spot market, and the spot market will be our actual KLCI index. So if let's say the actual KLCI index is going up, okay, then our futures market will be also going up. But however, today is very strange, right? Because you see that our futures market was very bullish, okay, but the actual market was bearish. At one time, in the first 15 minutes, our futures market was going to 1450 and above. So it was very, very bullish. But when the actual market opened in the morning at 9 a.m., we saw that the market actually came down. Then our futures market quickly reversed the trend, and then you see that people are selling down. So that is why sometimes when you look at the futures market, you may think this is the situation, but the actual situation may be different from what you're thinking. Okay, so meaning that we still need to observe the spot market. We cannot trade the futures market without looking at the spot market. It will be a disaster. I can say that it will be disaster because you are just purely trading the futures market, and then you look at the technical analysis, but you ignore the actual market, and that is wrong. Okay, so later when we look at the fundamental factors, we will still have to go back at the actual market, which is the top 30 component stocks. Okay, so here, if let's say you buy at 1440, right? Then if let's say the index go by 1 point, 1441, then you will see that your account will have 50 ringgit more. So you have a paper gain of 50 ringgit. So then as the price goes further up to 1450, okay, you gain 10 points. So then you will gain how much? Will be 10 points times that 50 ringgit here. 10 times 50, that will be 500 ringgit. So in a normal day, usually for me, my target is about 500 ringgit only. So if I manage to hit that 500 ringgit in the first 15 minutes of the day. For example, from 8:45 a.m. until 9 a.m., the first 15 minutes, then I'll stop trading. Because I have reached my target, I don't have to keep on trading. The more you trade, the more risk exposure you are exposing yourself. So you don't want to expose yourself to unnecessarily. So once you hit your target, you stop trading. So then you just continue to observe the next day. Okay, so that is why it is very interesting. Okay, for me, I find that it is very interesting, and it's not difficult at all to trade the futures, provided that you have the right direction. Okay, so it's 1.50 ringgit, and the minimum price fluctuation is actually 0.5 index, 0.5. So that will be 25 ringgit. Okay, so that will be looking at the index, or we call it the bid. Okay. Trading hours is 8:45 a.m. Our actual equity Bursa Malaysia is 9 a.m., right? So this futures market opened 15 minutes earlier and then closing 15 minutes later. So then you see that the trading hours is 8:45 a.m. to 12:45. Okay, even the lunchtime is 15 minutes later. Then starts at 2:30 and then closing at 5:15. So meaning that before the market open 9 a.m., this 15 minutes, okay, if you guess correctly, most likely you'll be able to make your money for that, for the rest of the day. So meaning that you will be able to hit your target for the first 15 minutes. However, if let's say you are not sure, like probably today you look at it's 50-50, you may want to stay on the sideline and then wait for the market open. And sometimes, okay, another occasion is that when it was very bullish, okay, when it was very bullish, and then you are expecting the spot market, which is the actual KLCI index, to have a gap up. Okay, so in trading, the gap up, gap down, all these are very, very important strategies. So if let's say you are expecting the spot market, the 9 a.m. KLCI index is going to experience a gap up. So what you can do is that you don't trade in the first 15 minutes. Okay, you will wait until the 9 a.m., observe the gap up, count how many points. So for me, I usually count like 7 points, minimum 7 points in the spot market. Then it's worth for you to jump into the boat, follow the bandwagon, and then go with the trend. So if let's say you see that, hey, the gap up is only 5 points, then I think you just observe first. No need to jump in the boat for too fast, okay? Because the gap is not big enough for the momentum to go further. Okay, so that is looking at the first 15 minutes and the morning trade. Okay, usually from my experience, you focus on either one session, either morning trade or afternoon trade. For me, I prefer the morning trade. You just focus on one session, and then you just focus well, okay? Because you really have to focus, and then you cannot do other things. Because if you do other things, you may lose your focus, and then you will lose money. Okay, so you always try to keep alert, and then always tell yourself everything has to be careful and then proper, and then such that you want to minimize your losses. Okay, so as I go along, I see some questions, and then I will also answer. So okay, how much the charge per trade? Good question. Each contract for the FKLI is 5,000. Okay, 5,000. So in fact, they have increased the price from 4,200 to 5,000, around 5,000. So no matter, so that means we don't look at the price or whatever, not like the stock like that. So it's like one contract, you just have to come up with 5,000 and then you just buy one contract. Okay, and that contract depends on what price you buy. So it could be 1440 or 1450 or whatever price that is in the prevailing price. Okay, so that you just buy according to the prevailing price, but then the contract cost to you is 5,000 fixed. Okay, it's fixed price for one contract. And then the brokerage is 15 ringgit. It depends on your broker. Okay, so the normal brokerage fee is about 15 ringgit. Okay, so some will offer 12 ringgit, 15 ringgit, but it's more or less there. So when you buy, you have to pay 15 ringgit. And then when you want to sell means close a position up, you also need to pay 15 ringgit. So everything is fixed. The price that you pay is fixed, 5,000 ringgit, and then the broker fee that you pay is fixed, 15 ringgit. So you can calculate your cost very, very easy. Okay. And then when you make 10 points, you make 500 ringgit. So 500 ringgit divided by 5,000 means that you make 10%. And then it can go and the other way, meaning that if you lose money, then let's say you lose 10 points, then you will lose 500. Okay. Is the US midterm election cause a bearish market today? Well, I don't know whether you noticed that today is the lunar eclipse. Okay, lunar eclipse. And for traders, if you Google, many traders in the world, actually, they look at the lunar eclipse, solar eclipse, and these things like that, especially the commodities futures traders. Why? Because when you have eclipse, right? Especially in the current today, the eclipse pathway, meaning that it will pass by our Malaysian sky. But today our sky is full of clouds, so you can't see the eclipse. But actually for all the traders, right, most of the traders, they will look at that. So meaning that whenever you have eclipse, it will be emotional. Investors are more emotional. And it can go either way. It can go to a very bullish mode or it can go to a very bearish mode. So today I look at the sentiment, it is more to the bearish side. Okay. Midterm election, in the history, I don't see any relation. Like in the past, I didn't see that the midterm election will cause some effect onto the stock market. But however, for the US, I think it's more on the interest rate. Okay, because we know that the interest rate is going to be increased again in December. And according to the recent remark by Jerome Powell, he still think that it is too far from over. So meaning that he still will continue to raise the interest rate. Okay, yeah. And what is the reason early by 15 minutes early and close? That could be in the, just like, you know, in even in the US, they are also like that. You have the early trade. So I suppose that one is for their just to position themselves, or you know, to make them to get into a position even before the market start, to do some hedging lah. Okay, basically the futures market is for hedging, but however there are more speculators than hedgers. So meaning that the original intention for the futures market is to hedge your position. So for example, you have bought a lot of blue chip stocks in the KLCI, our Bursa Malaysia. You buy your overall portfolio is about 100K. Then you wanted to do some hedging, because in our KLCI we can only long, we can buy, we cannot short. The short is very troublesome. You have to close a position in within the day. So we can only do long. So then in the futures market, we can short. So that's why the futures market is, the main intention is to do hedging, to hedge your, especially the index futures, is to hedge your equity position in the stock market. Okay, so when the market go down, at least when you short, you can still make money in the futures market. But however, the futures market nowadays is more dominated by the speculators. It will be all speculators whereby we just want to apply our technical analysis skill and then to profit from the market. Okay. Okay. Okay, Leon, later when we come to the strategies, we will talk into that cut loss. Okay. So here, we are looking at the trading hours. Okay, so another contract is the mid 70. Okay, so this mid 70 will be the FKLCI will be looking at the top 30 components. So then in terms of market cap, so the mid 70 will be looking at the next 70 market according to the market cap. So it will be from 31, 32, 33, 34 until 100 in terms of the market size. So here the contract value, like initial margin, we call it the initial margin. So each contract, how much you pay. Okay, so each contract for the FM70 is 2,500 ringgit. Okay, just now the FKLI is 5,000 ringgit, right? So this FM70 is half price, which is 2,500 ringgit per contract. And each point is, if you gain 1 point, it is 4 ringgit. Okay, so 1.4 ringgit, and then you calculate how much point you will make. And same thing, 8:45 starts, and then also ends at 5:15. Now, of course, I forgot to mention this is the after hours trading. So started last year, we had the night trading session. So that was, to me, I think it was very, very good, because usually if let's say you didn't manage to close a position, or you initially you still manage to make some money in the night trading hour, but nowadays the night trading hours also difficult to make money. Yeah, so actually for the night trading hours, it's we are looking at 9 p.m. to 11:30 p.m. Okay, 9 p.m. to 11:30 p.m. So that means we can actually look at the US market opening. So US market usually open at 9:30 our time, but starting yesterday or today, we are going to look at 10:30 p.m. started. So at least when the US market started, right, we are able to trade. If let's say you shorted a position during the day. Okay, let's say you shorted a position, you think that it is very bearish. Like I think last week there was one of the day whereby the Asian market was bearish, but then suddenly the overnight sentiment in the US become very bullish. So then in the past, if we do not have the night trading, we will have to wait until the next day, then we can close the position. But now with the night trading, you can quickly close a position during the night time. Okay, so which is, I think it's a good opportunity. They extend the trading hours. So then you are looking at morning, afternoon, and nighttime. So you can trade 3 sessions. So my advice is that you focus on 1 session. Okay, you don't trade the whole day, because when you trade the whole day, you cannot, your mind, I can tell you, your mind will not be able to focus, and then you will start to make wrong decision. Okay, so you try to focus on just 1 session. Okay. Friday, no night market. Okay, Friday, no night market will be until the Thursday only. So if you ask me why, I have no idea. That is the according to the Bursa market. Okay. Okay, so now let's take a look at the fundamental factors that drive the index. So for the KLCI index, we have top 30 components. So where can we find the sources? Okay, so here I am sharing with you the sources. So I share with you, this one is for Malaysia stock base. Okay, let me look at the chat. Okay. Okay, so this, you click that link, it will be that. Maybe Friday night, the brokers and those working also want to rest. No trading. Oh, also reasonable. Okay. Okay. So here we are looking at this. Okay. So here, if you were to just click the market cap, it will be ranked according to the largest market cap. So what I want to stress is that because the derivative market is like a derived demand, the derivative come from derived. So that means that the futures market, the price, okay, the price fluctuations, right, is actually derived from the actual KLCI index. So then, and the actual KLCI index is made up of these top 30 component stock. So it will be important, very, very important that you monitor these few top 30 components, especially the top heavyweight component stocks like Maybank, 100 billion, and Public Bank, 85. So usually I'll look at these top stocks, the top 5 banks, Maybank, Public Bank, CIMB, RHB, Hong Leong, okay? And then plus the PCAM, and then Tenaga, and IHH, and P Metal. So these are the top 30 components. So you need to monitor. So how do you monitor? Okay, so you go to the chart here. Okay, so here I use the tradingview.com. In your platform, depends on which broker account that you open. Usually they will provide you with the chart. Okay, so there are many brokerage accounts. So I don't want to mention the names. You can just Google. Okay, so there are so many of them, and then they will provide the charts to you. But however, for illustration purpose, I will use the tradingview.com. And then what is the ticker symbol? You just have to type FKLI. Okay, you type FKLI, it will lead you to this, and then you click, and then it will be a continuous current in front contract. So meaning that this chart is a continuous chart. Because our contract is like every month, right? So then every month it will be stopped, finished. Like November contract will finish at the end of November. Then December contract will finish in the end of December. So you will see that there's no continuation. So here we are looking at the continuation. Okay, so that means they just continue the rolling over, and then they plot this chart. So here we are looking at the FKLI, and then now I want to show you the Maybank. So you need to monitor on a weekly basis. Okay, I don't really monitor on a daily basis, but usually I will monitor on a weekly basis, and then I just go through, except sometimes whereby you have a certain big sell down. Then if there's a big sell down, I will have to quickly go to the Maybank and the top 5 banks, and then I will check their technical analysis, see whether they are still supported by the trend line. Okay, so here we see that Maybank technical analysis. So can anybody tell me what do you find this chart? Is this chart bullish or bearish? What do you think? Is this chart bullish or bearish? Okay, let me see where is my chat. Okay, I think sideways. Okay, some say bearish. So in order to tell the difference, right, it depends on how you look at this chart. So basically the 200-day moving average. So can you tell me, are we at above or below the 200-day moving average? And then at the same time, are we at above or below the 20-day moving average? For long-term bullish, we are below. Okay, we go by facts and figures. Okay, no emotion. Okay, so meaning that you don't care how good is this company is. this company I know is fundamentally strong, is very good. It is, you know, the largest bank in Malaysia. You don't care about all these fundamentals, emotional sentiment. Okay, you just look at the technical analysis. So you just ask yourself, this is a double top, and then this is a neckline, and then this is a 200-day, and then this is a 20-day. So currently it is below all of these. So conclusion is bearish. Okay, you just have to ask yourself this, is it below, is it above, or whatever. And then if you see all the criteria, so you give a conclusion, it is bearish. Okay, then you know that the largest component, heavyweight, the most heavyweight stock in this KLCI index is actually currently in a bearish trend. Then you also look at other, like usually if Maybank is bearish, other banks also bearish. Okay, so now next I want to look at PCAM. Okay, so if you look at PCAM, we are actually at also below the 200-day and that 20-day moving average, which also means that it is also bearish. Okay, but however, within the bearish, right, it is still within a horizontal trend, so meaning that it is moving sideways. Okay, some say Hong Leong is bullish. Okay, let's see. Bank. Okay, so Hong Leong Bank is above that 200-day moving average, but below that 20-day. So it is short-term bearish, but long-term is still bullish. Okay, so Hong Leong Bank, among all the banks, it is on a better position. Technically, it is on a better position. And then there's also another one, P Metal, right? And then also IHH and Tenaga. Okay. So this is P Metal. And you can see that it is above that 20-day moving, but below that 200. And overall, the trend is still on a downside. Okay, so meaning that most of these top 30 components, they are in a bearish trend. So once you get these fundamental factors, once you get hold of the fundamental factors, then when you go back to your futures trading, then you will be able to sense that you cannot have, although intraday you still can long, short, and whatever, but the bigger trend is that it is still towards the bearish mode. Okay, so meaning that when you want to long, you can still long, but then you cannot expect 20 points of gain profit. You probably will reduce your gain. Let's say you long at a certain price, and then maybe 5 points you close your position. So meaning that maybe in other days I want to take 10 points of the profit. So now I just take 5 points, and then I just close the position. Okay, so which means that this will give you the fundamental. So that means when you are trading futures, right, you have to look at both the fundamental as well as the technical analysis. Okay, because the fundamental will give you the longer term direction. Technical is more to the short term, but the fundamental will give you a longer term. Okay. Somebody asked about inter-Pacific free CDS opening. No, the futures market doesn't require the CDS. So it's not the CDS. Okay, so CDS is purely the equity market. So the futures market is just the futures market. Okay. So then we look at here. Okay, so we go back to the PowerPoint. So here we are looking at the, I need to speed up a little bit. Otherwise, yeah, I have to. So these are the top 30 stocks lah. And then the mid 70. So now we are looking at the mid 70. So the mid 70 will be from the 31 until the 100. So where can we get the sources? So we can get from, I share with you another source. Is called the Saham.my. Okay, Saham.my also have that component stock. So this one is the mid 70, the mid cap stock, and you just click the market, and then it will be ranked according to the market cap. So the largest market cap is Airport, Gamuda, Inari, all this. Okay, so then you just have to monitor. Now, which one is better? Do you trade the FKLI, you trade the FBM70? It depends on your preference. So if let's say you are more familiar with the mid cap stocks, like all these small caps, mid cap stocks, then perhaps you can trade the FM70. Okay, so if let's say you are more familiar with the blue chip stocks, the heavyweight stocks, then you can trade the KLCI. Okay, so it depends on your preference. Yeah, it's free. This website, all the websites that I show you, they are all free website. Okay, so so that is why I'm sharing all the free website here. Okay. Okay, so also the fundamental analysis, right? We also need to look at the macro. So for example, what is happening, or what is the main focus of the macro environment is the interest rate. So if you look at the interest rate, how many of you think that when the Jerome Powell stopped raising the interest rate, right, we should see the stock market reverse immediately and then go for a bullish trend? How many of you think that the stock market will reverse before the interest rate stop? How many of you think that it will be at once the interest rate stop raising, then the stock market will reverse? Or how many of you would think that even after the interest rate stop raising, the stock market will still continue to go down? Okay, give me your thought. One is that before the interest rate stop raising, okay, the market turn around. Number two, right after the interest rate stop, straight away you see the market go up higher. And number three, even after the interest rate stop, it will still continue to go down until sometime, then only it will recover. Okay, interesting. I have about like I have some 3 and the 2 and the 1 is like equal like that. 1, 2, 3 are all equal, like our election like that. Okay. Yeah. To me, my personal opinion is 3. So because I look at the historical trend, I study the interest rate hike and the policy, the interest rate policy and the stock market reaction towards the interest rate, and also the commodities, which is the crude oil price, okay, and also the US dollar. These 4 things are the US dollar, the commodities, the interest rate, and the Dow Jones Industrial Average for the 100 years chart. And I noticed that the 1970s, the late 1970s to the early 1980s, that recession, we are currently very, very similar to that recession, very similar. We had the same thing, is that the US dollar was, but during that time, right before the situation was that the US dollar depreciated early 70s, because the interest rate high was actually at the late 70s. So the late 70s until 1979, 1980, the interest rate was almost 20% for the US. Okay, 1980, and then they stopped raising the interest rate at 1981. But however, the stock market continued to go lower and lower until 1982 August. It continued to go down another 1 year. So what was the reason during that time? And that time was in the early 1970s, which means that in order to cause that, it brings back to the as early as 1971, when the President Nixon abolished the Bretton Woods system. And the Bretton Woods system is the gold standard. So during that time, the US dollar was pegged or tied with the gold. So meaning that if you have $35 US, you go to the central bank, you can exchange with 1 ounce of gold. Okay, literally you can use your US dollar to exchange with 1 ounce of gold, 35 USD for 1 ounce of gold. So then because too many people exchange the gold during that time, so then they cannot sustain, and then President Nixon abolished, and then after they abolished, then they can freely print the money. And then when they do that, because Nixon was more on the spending type, so he spent a lot of money, so then he kept on printing money. So then the US dollar keep depreciating. So while US dollar depreciating, the oil price keep increasing. During the 1972, 73, 74, 75, the oil price keep increasing, and then while the US dollar keep falling. So what interesting is that the inflation was very, very high. Okay, it was caused by the cost push inflation, and as well as the imported inflation, because their currency was weaker. So imported inflation and together with that cost push inflation, so then they have this stagflation. So high unemployment, things like that. So when so when the next president is Jimmy Carter. So when Jimmy Carter took over, so then he appoint another US Fed, is called the Paul something. Okay, so he actually increased the interest rate at a very, very fast rate. So that's how we saw that the interest rate increased to double digit and even to 20%. And then he stopped. Okay, he stopped, and then when Ronald Reagan took over the office, then they stopped. Walker, yeah, that's right. Thank you, Paul Walker. So then they stopped raising the interest rate 1981. But however, the stock market continued to go down. Okay, so similar thing happened in the year 2000. So the year 2000, before that, the Fed was actually raising the interest rate, but however, they stopped raising the interest rate even before the 2000. And however, once they stopped raising the interest rate, right, even before they stopped raising the interest rate, the market already started to go down. Okay, and then when they stopped raising the interest rate, the market continued to go down until 2002. So these two are very, very similar. And of course, there were some exception. The exception was 2008 recession. So the 2008 recession was the stock market, when they were raising the interest rate, the stock market continued to go up. And then when they stopped raising, then the stock market also continued to fall. So the thing is that we don't expect the market to turn around so fast. So it's usually when they see that, oh no, we have over caused the thing to deteriorate. The economy is already in a very, very bad shape. They have put the pedal of the oil, too much oil already, put too much oil. So then it's overdone already. By the time they realized that it was overdone, the economy is already in a very, very bad shape. So how can the company make money in a weak economy? So of course, the stock market will continue to go down. So which means that don't be too happy when and furthermore, they are going to stop in the middle of maybe 2023. So which means that we still have a long road to go. Okay, so that is on a macro picture about that investment environment. So all these, especially when you are doing the index futures, you have to know. But however, if you are doing the commodities futures, right, you just have to look at the cycles of that commodity cycles and then to trade accordingly. So personally, I feel that I prefer the index futures because it's to me, it's very easy to relate to the economy. Whereas the commodities, I need to know the supply and the demand and the stock level of the crude palm oil and all this. To me, is too challenging for me. So I prefer to look at the index. I just look at one chart and then that's it. Okay. Yeah, and also you need to look at the micro. The micro will be the industry, because just now we saw that majority of our KLCI components are the banking stock. So as long as the banking sector, okay, they are still okay. So basically we won't see too negative of the KLCI index. Okay, so unless the banking sectors also sell down, then definitely the KLCI index will sell down as well. Okay, so and which means that when you are looking at the index futures, you also look at the industry sectors and sectors. Okay, so basically the heavyweights are all the banking sectors, and then followed by the other ones are like IHH, Tenaga, PCAM. Okay, individual ones. Okay. So also you need to look at the SWOT analysis as well. And a lot of people for the past 2 years, they are focusing too much on what technology stocks. And then when it comes to this year, right, they realize that their portfolio is all flooded with technology stocks. And then it's too late. Okay, they all came down. So it would be good that if you were to do a balanced portfolio whereby you have a portion in technology and then a portion in consumer and then banking, so that you have a well-balanced sector. And then because each sector, they will have a different fundamental. And then this one is more to the equity. So meaning that in the futures market, you will just focus on the top 30 component stocks. Okay, so I will not sidetrack. Okay, so this is the SWOT analysis. Okay, trading strategies. So trading strategies, they are basically you can either long or short. Okay, so let's go straight to the chart there. Where is my, okay, here. So I straight away I go to FKLI. Okay. Usually before I go to FKLI, I will have to look at the KLCI index. So today, because of the time, I just give you the FKLI. So the FKLI, I go for 50 minutes chart. Okay, so you can see that if let's say you are really looking for intraday, right? So you have to look at 5 minutes, 15 minutes chart. So if let's say you see that this one is a 15-minute chart. So the 15-minute chart, if you to zoom in, basically we just last week we just had this sharp fall. Okay, sharp fall, and then with a sharp rebound, and then now we are falling, and then like this. So this was a 15-minute chart. Okay, so first week of November. So now we are actually hovering around the 20 and the 200 moving average, and we see that there is a W here. So that's why a lot of people say it's very, very bullish and then long. But however, today, the last 15 minutes, you see this sell down, right? Okay, so overall, you see that because when it is hovering around that 50-day and the 200, this trend here, to me, I think is more on the sideways. Okay, and more on the sideways, and then you need to confirm again, okay, with that 4-hourly and also the daily chart. So let's take a look at the 4-hourly chart. So the 4-hourly chart, you also see that it is also just hovering around that 20 and 200 4-hourly chart line, okay, moving average line, which is 4-hourly 20 and the 200. So meaning that the market is undecided, it's 50-50. And then you can also confirm again with the daily chart. Okay, with the daily chart, the trend is clearer. This whole thing is below that 200-day, and this is a downtrend. You can draw a downtrend line, and we are still at the downtrend line. So meaning that if you were to look at the daily chart, the bigger picture is it is still in a downtrend. Okay, but however, when you look at that 15-minute chart or shorter time frame, it could be bullish, it could be bearish, and you just trade accordingly. Okay, but to me, if let's say the bigger time frame is bearish, then when I trade the smaller time frame 15-minute chart, I will try not to be bullish. Like for example, if I were to long, and I won't long for like 20 points, unrealistic. Maybe I'll just 6 points. And then if let's say you feel that you do not want to risk your money, you just stay at the sideline. Okay, you don't have to trade. Sometimes you trade for the sake of trading. It's not worth it because the market is too volatile. Okay, so you just have to wait patiently for the chart pattern. So for me, usually I will wait for the chart pattern. Okay, so for example, you look at this part here. Recently there was a double top here. Okay, we just look at recently lah. There is a small double top here. So this small double top was actually from October till the first week of November. Small double top. Here you see that it's a double top, right? But let's see the 15-minute chart. It will be clearer to you. So just now we saw October 21st, right? October 21st. So October is here, 21st is here. Okay, so this is it's much clearer in a 15-minute chart. It's very clear. So you can see that it is a neckline. Okay, so this chart pattern was very obvious. Okay, so and the chances of success rate is higher as well. Why? Because the bigger time frame is bearish. And then when the shorter time frame is also showing some bearish chart pattern, and you see that it's about to break, you just have to trade all this very obvious chart pattern trade. Okay, so in this case, you wait patiently. You wait for the trend to break. Okay, this one is a 15-minute chart. So then finally, 9:45 a.m. November 3rd, the one whole candlestick is below this neckline. Okay, and sometimes once you see that this one whole candlestick is below, right, you quickly go and check the 4-hourly and 1-hourly chart. Okay, so just now the November 3rd is here. So this is November 3rd. Okay, so November 3rd, you see that in the morning, it is still, the whole candlestick is still forming. It's not yet formed. So under this kind of a situation, normally I will wait for the afternoon because I need to see the whole candlestick is formed. So when you see that it is about to form, you are quite sure that it will be down. Okay, then you can short. So here you see that this whole bearish is very bearish. Then basically until the noontime or afternoon time, you can short. So, but here we are looking at a confirmation. So you need to confirm with a 4-hourly chart. Sometimes, okay, sometimes the 15-minute chart is showing negative already. But however, the 4-hourly chart, not yet. Then you don't add. Okay, usually for me, I don't add first now because I just want to confirm. So I want to confirm with a higher time frame, which is the 4-hourly or the 1-hourly. So then only you will add. Okay, once you see that, then you can set your profit target. So the profit target, you just have to measure the height of the chart pattern. Okay, this height, and then you can go accordingly. So usually I won't go exactly as the height of it. I will go somewhere below it. Okay, because just in case it didn't reach there. So that is the price target. Then cut loss. Somebody asked me the cut loss, right? So for the cut loss, usually either you will do look at the situation, because in it depends on whether you are in the intraday or longer swing trade. For longer swing trade, usually I will look at longer time frame. So meaning that I don't cut loss within the day, okay, because if it's a swing trade, you just have to wait for the whole situation or the candlestick to form, then only you will make a decision. Okay, so which means that for swing trade, the cut loss may be a bit wider because that is a swing trade. But however, if let's say you are on an intraday, right? Intraday, you can put a shorter time frame, and then within the day you have to close a position. Then you say that, okay, 5 points I need to close, means 5 points I will go, and then certain points. And sometimes you will have to look back at the neckline here, and then if it managed to go back up, to the neckline, then only you will close the position. Okay, so the neckline will be your decision point. So because you short here, right? So therefore the neckline is somewhere there. So from here to here is about 5 to 7 points. Okay, so that means that will be your cut loss. So this is one strategy whereby I find it very, very common to spot on, meaning that you just wait for the chart pattern. How often do you see a chart pattern? Usually this kind of a chart pattern, it won't come every day, definitely not every day, but it will be on maybe 1 or 2 weeks time. Okay, so that means that one month you probably if you just want to wait for this kind of a chart pattern, you probably will only have 2 trades, okay, which is reasonable. So if let's say you are the type whereby you are very fast action, you want to trade on a daily basis. So if you want to trade on a daily basis, then that will be another strategy. Okay, so it will be different. So for me, I'm more to the slow person. I'm not fast. I'm not fast enough to react, so I can't go for the fast strategies. Okay. Okay, have to continue. Okay, so this is a bullish, meaning that long, and then if it's a bearish, then you will short. Okay, so then you need to look at the 15-minute chart. So this is a 15-minute chart, and then versus the daily chart. Okay, so this is a daily chart, daily and the 15-minute chart. So you see the big macro view, and then you look at that. So if both macro and the micro are bullish, then you trade long, is success rate is higher. Okay, next I want to talk about is this new futures index is called FTSE for Good. Okay, FTSE for Good, it will be a new index that will be launched in next month, December. So Bursa Malaysia Derivative will be launching a new ESG index futures contract in December 2022. So I'm sure now everybody knows what is a ESG, right? So ESG stands for environment, social, and governance. So basically, we want to keep up to the trend. The trend is that everybody, investors are all looking at ESG theme. So it will be interesting to have another alternative to trade this ESG index as well. So then what is this ESG index? Okay, so if you to look at here, there's a comparison. We see that this the ticker symbol will be this F4GBM. Okay, so this is the ticker symbol, and it will be multiplied by, okay, let's see, will be multiplied by 50 ringgit. Okay, so same as the index, 50 ringgit, and the index will be currently is about 800 index. Okay, the FM70 is about 12,000. Okay, so where do you find this chart? You can find in the TradingView and investing.com as well. You just have to type. Okay, so this one is a 5-year performance. So we can see that it follow our Malaysian KLCI index very, very closely. So we also have the horizontal trend at the moment. So it is having a horizontal trend. And this one is comparing our KLCI index and the FTSE for Good index. It is almost mirroring. You see, it's same. Okay, why? Okay, here we see that currently there are 87 constituents in the FTSE for Good Bursa Malaysia index, which also include 26 FBM KLCI constituents. So meaning out of the 30 component stock in this FTSE for Good BM index, right? It has 26 out of the 30. Of course, this one mirror the KLCI, okay? And this was launched in December 2014, okay? And what is the framework behind? The framework is that all the public listed company by since 2016, okay, since 2016, all the public listed company in Bursa Malaysia, they have to include this ESG or sustainability report in their annual report. So I even cracked a joke with my student. I said that if you want to know which company, which public listed company is very good in their ESG, you look at their annual reports, the number of pages. So those companies with a lot of very thick annual reports, like Maybank is 200 pages and Gamuda is 188 pages. So if you're looking at these companies with like 200, almost 200 pages of the annual reports, you can see that their sustainability report is about half of that, almost half of the pages there. So which means that this company, they are very good in the ESG effort or movement, and which means that they score very high, which means that the fund managers will like these companies. Okay, so what do they do then? KLCI company rating, yeah. Okay, shortly I'll come to the rating. So here we are looking at E stand for environment. So environment will be looking at the greenhouse effect and the pollution and things like that. So obviously there are certain sector by default are not good for the environment. Okay, so you know what are those sectors? They are the energy, exploration, plantation, deforestation, and all this. Then you have the social. Social will be looking at labor standard. Okay, now I have to highlight the labor standard because this has been our Bursa Malaysia, the stocks team. Okay, meaning that there are certain stocks in our manufacturing, especially the manufacturing sector. They were having some of these issues. Okay, for example, the Top Glove, VS, and they were having some issues there. So then that will cut the rating, and then when they cut the rating, then the fund manager will not buy those stocks. Okay, so this is the social, and the governance will be looking at their transparency within the governance rules and regulations, and even within the corporate, whether they are transparent to the within the company and to the shareholders. Okay, the governance. So if you score highly, then of course your rating will be high. So where can we find a rating? So the rating here, you just have to Google, and then they will link you to this Bursa Malaysia website. Okay, so here is the rating here. All our public listed companies are here, and you can see that are they part of the FTSE for Good index? Yes. Okay, so this is part of it, and some are not. So these are their stars, their ratings. So these yes are the one with 3 stars and above, then they will be classified under here. So there are 87 of them. Okay, so you can scroll down and then you can see 3 star, 4 star, or yes, 1 star, no. Some 3 star also no. Okay, and 4 star, yes. Okay, so if you this is also a good reference for you to buy some, because now you know the stock market is very, very weak, right? So it's good for you to accumulate stocks. So if you want to looking for what stock to buy, you come to this list, and then you see that these are the potential good stocks to hold. Okay, okay, so we go back here, and so this is the index. You can see that the performance. Okay, and these are the components, which are mostly our top 30 components plus some mid-cap stocks. And you can see that number of company, looks like the consumer and financial, the banking, and the industrial, they are included. Okay, there are some utilities and even energy also can be included here. So it depends on their effort. So for example, you look at Tenaga, okay? Tenaga, although it is a utility and then they use the coal and the crude oil and all this to generate the electricity, but nevertheless, we do see that they have this renewable energy, solar energy effort. So which will add some points there, okay? And some of the plantation sector, for example, Sime Darby, although the plantation sector, we have pollution and things like that, deforestation, but however, if let's say this company, they have a lot of effort onto the environment, renewable energy, they will score points as well. Okay, so you just have to read their sustainability report in the annual report. So FTSE for Good Bursa Malaysia Index, you can see that the banks, Public Bank and Maybank are the largest constituents. Okay, so that means they are the heavyweight. Oh, Sime Darby has a forced labor case. Okay, then then there will be marks will be scoring will be deducted, will be affected a little bit there. Okay, so you see the banks are more into the heavyweight here, and then followed by the Tenaga, and then the Petronas, all this. Okay, then we come to this part whereby when you trade the futures index, okay, so when you trade the futures index, it's a trading. So anything to do with trading is risk, full of risk. It's not like investment. Investment, you don't have to think so much whether to cut loss, not to cut loss. But if you are trading, right, this cut loss, not cut loss, stop loss, whatever, is always in your mind. For example, for myself, if let's say my trade is a short-term one, okay, so what I'll do is that once I place a position, right, then I will, before I place the position, I already have the stop loss figure there. Then once I put click execution, I got that either long or short, I got that contract. Then the next thing is that I will have to get ready my button. Usually I will do a manual stop loss. I don't do auto stop loss, but I'll just monitor and then I'll do a manual stop loss. Then I'll put my finger, okay, I key in the price that I want to stop loss. I key in the price and then I'll put my finger at that button. Okay, so if it happened to reach that level, okay, so then I'll just have to stop loss, cut loss. Okay, so meaning there is no emotion attached. Okay, you don't have to keep thinking, should I cut loss, should I not to cut loss, should I wait and see, or all these things. Okay, so no, so you just have to follow the candlesticks. Okay, so that is money management, risk management. What is risk management? Risk management is whereby you want to reduce your risk. There are 3 levels of risk management, 3 layers. The very first layer, I'm just talking about the overall, okay, for any investor, not only for this futures trading. For any investor, the first level of risk management is your asset allocation, your asset class allocation. So if let's say you are the conservative type, then you will put 50% of your money in the fixed income, meaning the money market fund or the FD. And then you will put 50% into that trading, investment, equities or whatever. So at any one time, you do not risk more than 50% of your money in the equity market or in the trading. So that is the first level, first layer, asset class. Okay, so you limit your risk by your asset class. Then the second layer is the your position sizing. Okay, so for example, the past 2 years, too many people see the good things about technology stocks. So then when they buy, they subconsciously, they didn't realize that they are buying too many technology stocks. Okay, they didn't realize because they didn't do proper planning. So then the position sizing didn't take into consideration. Then you will run into a situation whereby you will be ended up having over exposure into one particular stock, one or two particular stock, over exposure. So that is called position sizing. So you need to reduce that risk. You need to reduce the position sizing into a maximum position sizing. So for example, 2% of my portfolio. So at any one time, it will not be more than a certain percentage of the total overall portfolio. Okay, so that is second layer, position sizing. And the third layer will be your stop loss. So this stop loss will be either go by your technical analysis, either you go by the fundamental reason, or either you go by the time factor. Okay, for example, some people, they trade according to the time, say, okay, by noon time, close all my position. Just close, whether you lose whatever, just close at the noon time. So that is called the stop loss, which is the third layer. So if let's say you follow these three layers, right, then you are able to manage your risk better. And of course, money management is more towards the trading side. Trading side meaning the stop loss, position sizing, not so much on the asset class allocation. Okay, so the risk management is more on the overall, whereas the money management is a subset of the risk management. Okay, so money management is just part of it. So when it comes to money management, we have to look into the detail part of the trading, whereby we have to put a stop loss, and then we have to put a maximum position sizing, and then we have to trade according to the risk and reward ratio, and then don't average down. Okay, although this is here, but it depends on the situation. Okay, so sometimes in a layering. Okay, so when you trade, you will laddering, meaning that you will when it is on an uptrend, you will add your position. Okay, so meaning that you are actually averaging up. And then so when it is downtrend, you are also adding a position, you are averaging down. So not necessarily is bad. So it depends on your strategy overall. But why I put here is that don't focus too aggressive on this averaging down, okay? Because you want to get even or whatever, and then you must have a limit. Okay, so don't ended up you cannot take the risk, and then you ended up over your risk limit. And take a break is good, because sometimes when you are losing for like 3 consecutive trades in a row, take a break. Take a 3 weeks break. Take a 1 month break. Okay, don't trade for because the reason why is because when you are losing, or even when you are winning, okay, three trades in a row, when you're winning or when you're losing 3 trades in a row, you will be emotional. Either you are too happy or you are too sad. Okay, because you are either you're winning or losing, right? You'll be emotional. So when you are emotional, the next decision that you make will not be a objective decision. So it will affect your performance. Okay, so that is why I feel that taking a break is good. Okay, sometimes you want some gains, and then you make some gains, and then you just take a break. Okay, so preserve your energy so that you can focus on the next trade. Avoid higher risk trade. Depends on your risk lah. Okay, some people can have a higher risk tolerance, you can go for that, but personally I'm more to the lower risk tolerance. And then stick to your niche. Okay, what is your niche? Some people, they are very familiar with the index, like they have been observing the index for many years on a daily basis, so they are very familiar with the index, and then they know how the index will move, and then the behavior of the index, and the behavior, especially the behavior. So some are good in commodities, for example, the crude palm oil. So you know the behavior well. So you just have to stick with that market. Okay, you stick with your niche. Don't try to keep jumping. There are many financial markets in the world. You jump from one commodities to another commodities, or you jump from one forex pair to another forex pair. So because even the forex pair, they have their own behavior as well. So if you are good at certain thing, you just stick with that. Okay, and then to repeat over and over again. So the reason why you need to repeat over and over is because you need to get to a point whereby you are very good in execution. Because when you do things over and over again, right, it becomes subconscious to you. When you do things, is something new to you, you will think it is very difficult. It is every decision is very consciously making the decision. But however, if you are doing it over and over again on a daily basis, whenever you see this, you do this, and then whenever you see that, you do that. That means you are automatically subconsciously get into your brain, and then you just have to execute it. So that will be at a higher level. So if you can reach that higher level, that means that you are not emotional anymore, and then you just carry on with your trade according to the situation. Okay, and of course the last one is not to have a vengeance trading. So especially when you lose some money. Okay, so when you lose money, you wanted to get back your money, then you even have a higher position. That is dangerous. Okay, or sometimes even you have a big win, okay, and then big gain, and then when you have a big gain, then you become very optimistic, then you take on a higher risk, also very risky. Okay, in summary, we want to select the instrument to trade. Very important, you select your niche. So if you are good in KLCI index, you trade the FKLI. Although the number of trade occurrence in a month is not too frequent, but however, it is safer for you because you are very familiar. Have a few strategies on hand. Okay, for example, the strategies that I taught you is the chart pattern strategies. So perhaps you can have a RSI strategy or a divergence strategy. Okay, so different strategies, or gap trading strategies. And identify the most favorable risk reward ratio. Okay, 3 to 1 is ideal. Take profit and cut loss according to your plan. Okay, so before you enter, you must have a certain level, how much you want to profit and how much you want to cut loss. You already have that in your plan, then you execute it. So review your trades, reflect on each trade. Okay, because if you keep a diary, then you know what was your mistake, and then so that in the future you don't do the mistake again. Okay, so okay, I think I have finished. Okay, the time is just right. So
yeah, so if you have any questions, you may write in the Q&A box and Pauline will address them accordingly. But I'm sure that Pauline have addressed so many questions just now. So if
yeah,
there are any more questions, let's do a few. If there are, you can write in the Q&A box, okay?
Okay. So for some of you who are new, perhaps it's an introduction to you, and then so you will look into it, and it's not as difficult as you think. It's quite easy. To me, it's easy. Yeah.
So
just
let's
look at
do one
chart.
last question from Lee. What are the strategies to trade intraday in FKLI?
Okay. For the intraday, I find that the gap trading as well as the chart pattern trading, these two are the more reliable strategies. So if you look at the gaps, you calculate the gap, certain point, then you go in, either gap up or gap down. Okay, then you go in, and then you just trade with the trend because the momentum is there. The bigger the gap, the bigger will be the momentum. And also sometimes you have the gap together with the chart pattern. That's ideal. So meaning that you have double top and then followed by a gap down. Wow, that is ideal. Okay, so then you just have to trade with those trade.
All right. So, okay, one more question by Edmund. How long is the period of each index futures that you use for trading?
How long is the period of each index? You mean the time frame? You mean the chart time frame, or the holding period? What do you mean by is okay? If it's a time frame,
I believe.
Time frame is a
holding period.
Okay. So it depends whether it's an intraday. So if it's an intraday, I have to close within the day. I don't care whether it is bullish, or you make money or not make money. So for example, by Friday, I need to close, means I will have to close. I will not carry on to the next week. Okay, so that is the depends on my objective. So sometimes I will have a swing trade. The swing trade, I may hold the position for months. Okay, I have hold the position for months before, and then the intraday is within the day. Okay.
Okay, Jane has a question in the Q&A box.
ESG similar as 33. Oh, what is
she's
that?
asking. I think she's asking, how important is each ESG?
Oh, the importance are actually there is a scoring for that. Okay, so according to the scoring, yeah, it is about 1/3, 1/3, 1/3. Yeah, it is about that. So there are a few rating company also, so it depends on their scoring, but basically it's about that.
Okay, now Dexon would like to ask,
Spread.
do you trade
Yeah,
FKLI spread?
Yes, I do. Yes.
You do?
Okay, usually I don't purposely trade the spread because, for example, if you think that it's 50-50 and then you go and open a spread, no, I don't do that. Usually when I trade a spread, meaning that I had an original position. So but the thing didn't turn out to be my original intention, and then it is going down opposite direction. Then I have to create a spread. After the position turns sour, I have to create a spread. So then I'll be getting a spread. Then from there, I will monitor. So I will take profit on the one leg, and then I will take profit on the other one. You get me? So meaning that I don't purposely go into a spread position. No, but it's after when things turn sour, then I'll convert into a spread. Yeah. Wash.
All right.
Sell.
So Chong would like to ask, can intraday loss be used to offset gain? Any wash sale rule?
What is a wash sale? I don't understand. Offset gain. Yeah, sure. Of course, you should have a gain and loss. So what you mean is that used to offset the gain. Yes, you will, because when you're trading, sure, you have some gain and then some losses. So that's why I will suggest not to over trade, because sometimes when you, for example, you make some money, you make a gain, right? Then you will be very tempted to trade again because you want to repeat that trades to make more money. But very often you will lose back your money because you are emotional already. You are being emotional, and then you are over optimistic, and then you underestimated the risk. Then you ended up losing back the money there. Okay. So sometimes you just need to take a break. Yeah.
All right, so it looks like there are no more questions on my screen. So let me go to my slide. All right, so there are still so many of you here. So I have great news to share, which is, if you're participating in our post-webinar survey, we are going to give away a Touch and Go e-wallet reload pin worth 30 ringgit to 10 lucky respondents who answer our survey questions. Okay, so we will randomly pick 10 persons who answer our survey questionnaire, and we'll give you 30 ringgit Touch and Go e-wallet reload pin worth 30 ringgit. So the survey will be launched right after this webinar and will also be sent to you via email. So we will reach out to the lucky winners within 2 weeks. Aside from that, since today our topic is on equity futures, we also want to let you know that we have this FM70 and Win trading competition. So if you trade FM70 and you reach a certain, you have reached the top volume lot size, then you'll be able to get some of the prizes, okay, cash prizes. Okay, so for retail investor, you may participate in the retail trading category. So you're not competing with the professional traders who has huge volume. Okay, so you're only competing with the retail trading category, where if you have a lot of trading volume, then you'll be able to walk away with some of the cash prizes. So the second round of the campaign started 1st November, which just started last week until 31st of December. All right. So if you don't want to trade the FM70 so regularly, You can also join this FM70 quiz challenge. So this is bi-weekly quiz challenge that will be hosted on the Bursa Malaysia, Bursa Marketplace social media account. So what you need to do is just answer the quiz in the Google form. All right. And then you'll be able to stand a chance to win 100 ringgit. Okay. So we're giving out to about 24 winners. Last but not least, we also have this, derivative e-learning series, DEL, which is prepared and presented by SIDC. So if you want to learn more about derivatives, SIDC prepared an entire series of e-learning series on derivatives, so you can go there and learn about derivative. Okay. Now, our next webinar is titled Trading BMD Futures for a Living, Critical Lessons You Need to Know to Get Started. So this webinar will prepare you, to be a professional or full-time trader that trades BMD futures for a living. What are things and essential building blocks and essential skills that you need to master before you should go on full-time? All right. So in the next lesson, we will explore what are the critical lessons that you need to know before you trade full-time. All right. So it's happening on 24th of November, 2022, 8:30 to 10 p.m. So here is the registration link I given you in the chat box. So you may register for it right away. All right. So with that, I will conclude my session for today. So thank you, Pauline, for sharing with us about how to use equity futures for trading gain and also to hedge our portfolio. So thank you everybody for tuning in to this webinar. Hope that it has added enormous value to you. All right. So we'll see you in our next webinar. Bye, everybody.
Thank you. Bye-bye.